Hello everyone and welcome back to the sessions on financial reporting. Friends, in this class of financial reporting, we are continuing with the topic financial instruments, and this is the 9th lecture on financial instruments. In this class, we will begin our discussion with something very important, that is derecognition of financial assets. So in earlier class we have learnt recognition of financial assets and financial liabilities. We have also learnt derecognition of financial liabilities in the previous class. This class is focusing on derecognition of financial assets in the first part. So financial assets provide you right to receive cash, correct? So if an entity has a right to receive cash flow, it will identify the source of that asset as a financial asset. Now, what if the right to receive cash flow are expired? For example, I am a company, NJ Limited, I have bonds. Those bonds are coming nearer to its maturity. So, what will happen once the bonds are matured and due for redemption? Once the bonds are redeemed, the right to receive cash flow from that bond, it's like exhausted. In such case, when the right to receive cash flow is expired, it is time to derecognize the financial asset. So, what will happen? Derecognition means it is opposite of recognition. Derecognition means to remove it from your accounting records, to remove it from your balance sheet. So, you are taking it out of your accounting records and balance sheet. So, when the right to receive cash flow is expired, you are simply going to derecognize the financial asset. Sometimes it may happen that the right to receive cash flow is not expired, but that right to receive cash flow has been transferred to another entity. Now this is something important. Here, what is the role of derecognition? It is worth understanding. Assume that I am NJ and suppose you are my creditor. Now I have some bonds which are providing me regular cash flows. I have right to receive cash flows from those bonds. But you are my creditor. Someday I have to make payments to you. Somehow we have agreed into an arrangement whereby I would say, instead of me receiving cash flows from that bond, better you receive the cash flows from the bond. That means the cash flows, the right to receive the cash flows have been transferred to the creditor. In such case, I have an issue in my accounting records. Number one, should I continue to recognize that bond as my financial asset and continue to recognize you as my creditor or a financial liability? That means simultaneously financial asset and financial liability should both appear in the balance sheet, or should I offset this financial asset with this creditor? That is, you are a creditor, I will offset your balance against this financial asset. So if I offset, both of these are knocked off from the balance sheet. So should I recognize both, or should I derecognize my financial asset against that financial liability or creditor? What should I do? This issue is to be addressed. Friends, let me tell you one more time what exactly is this issue. Please understand, I am making a scenario whereby I am an entity, Mr. NJ, or you can call me a company, NJ Limited, and I hold certain bonds as my financial assets. These bonds are providing me regular cash flows. On the other side, you as a counterparty, another party, you are a creditor. You are my creditor. I have an obligation to pay to you. If I have an obligation to pay to you, somewhere I have made an arrangement with you. I have asked you, I have requested you that instead of collecting the amount from me, you recover directly the amount from these bond proceeds. So whenever the cash flows are arising out of the bonds, I have transferred the right to receive the cash flows to you. So now instead of me, you will receive the cash flows out of the bond. So in such situation, what should be done? Should I recognize this bond, or I would say continue to recognize this bond in my balance sheet as a financial asset and continue to recognize you as a creditor or as a financial liability in the balance sheet? Or should I derecognize this financial asset which was in the name of bond? Should I derecognize this financial asset against offsetting this to a financial liability? Should both be appearing in the balance sheet, or should I set it off? That is the issue that we have to mainly discuss. So friends, what I am going to do is I am going to explain this entire concept in part by part, dealing with one situation at a time, and I will give you lots of examples to understand. So please do one thing, carefully understand each example. I will give you all the properly presented notes at the later stage. So don't bother about writing anything while I am explaining. Just focus on the understanding part of it. I am going to give you time to write down the notes. So until I instruct you to start writing, don't bother about writing, just pay attention. This is something very important as well as interesting. I would want you to draw your attention on the screen while I take you to certain examples over here. So let us begin with the first example. Here Mr. NJ is holding certain bonds, and these bonds are providing cash flows to Mr. NJ. Now there will be a point where the right to receive this cash flow is expired. So as per Ind AS 109, if the right to receive cash flow has expired, simply derecognize the financial asset. This is the first scenario. Okay. Now let me take you to the other scenario. The other scenario is Mr. NJ holds bonds. These bonds are providing cash flows to NJ, and there is another party, a counterparty, who is a creditor. Now Mr. NJ has entered into a contractual arrangement with this other party, that is creditor, that instead of Mr. NJ receiving cash flows out of these bonds, it is the right which is transferred to the other party. So the other party will now receive the cash flows from the bond. So now the point is very clear. If the entity has transferred the right to receive cash flow to other entities, then observe whether entity has transferred substantially all risks and rewards to the other entity. If yes, then derecognize such financial asset. So friends, what I am trying to tell you, please try to understand. When the entity, in this example Mr. NJ, who has transferred the right to receive cash flow to some other entity, then you have to also look into whether all substantial risks and rewards attached with that financial asset have also been transferred. If yes, then you derecognize that financial asset. Otherwise, we will look into what can be done. So what is the significance of this part? Let me explain. See what happens. Suppose I am supposed to receive 1 lakh of cash flow from that bond, and you are my creditor, you have to receive 1 lakh from me. I would say, okay, this money what I am going to receive, instead of me receiving this money, you take this money directly. So the proceeds from the bonds will come directly to you. That is how the arrangement has been made. What if the party who has issued the bond faces credit deterioration and could not pay 1 lakh? Suppose that party pays only 85,000. Then what? You would say, suppose you would say that, boss, I have received only 85,000 from this bond. Come on, balance 15,000 you pay to me. That means the risk of that bond was not transferred to you, correct? That means you are continuing to be a creditor with entire amount of 1 lakh. If any risk arises on that bond, that risk falls on me. In such case, I cannot derecognize that bond. I cannot derecognize that bond. I will continue to recognize that bond in my balance sheet, and simultaneously I'll recognize you as a creditor. What if the right to receive cash flows has been transferred to the other party, that is to you as a creditor, along with all risks and rewards? So I have made a statement in writing that I transfer you the rights to receive cash flows from this bond. Now all the cash flows from this bond are your cash flows. I also make one point. Hereafter, any fluctuation in the amounts of such cash flows is not going to affect me, and you also have accepted. In such case, the risk and rewards all significant risk and rewards attached to that bond has been transferred to you. That means if the asset gives lesser cash flow, your loss. If the asset gives you more cash flow, your benefit. I am not a party involved. In such case, I will derecognize that financial asset. That is the point to be understood over here. So what we have discussed, if the entity has transferred the rights to receive cash flow to another entity, and along with that all risks and rewards, all significant risks and rewards attached with that financial asset also has been transferred, then the financial asset should be derecognized. What if the risks and rewards have not been transferred? Then what? Then a question arises, if I have not transferred the risks and rewards to you, have I retained those risks and rewards? The answer again could be yes or no. If the answer is yes, then there is no doubt I will continue to recognize. If the answer is no, that means there is a confusion, right? When the question is asking you, have you transferred the rights to receive cash flow? I will say yes. Have you transferred even the risks and rewards attached to the asset? I say no. So then a question comes on me, have you retained the risks and rewards? I said no, I have not retained, I have not transferred, I don't know what exactly is the matter. Then one last question that will arise is, who has the control over such financial asset? If I have retained the control, the asset will be recognized, or the asset will continue to be recognized in my balance sheet. If I have not retained the control, if the control is in your hand, then the asset must be derecognized. That is all what we have to understand. So this scenario you have understood. Let me take you to the other scenario. So in this other scenario, as I have mentioned, Mr. NJ holds bonds and these bonds were providing cash flows to Mr. NJ. Now there is another party who is a creditor. Mr. NJ has made a contractual arrangement with this other party, that is creditor, that let this creditor receive the cash flows from the bond. So the right to receive the cash flows out of the bond has been now transferred to this other entity. So the typical question that arises now, have you also transferred the significant risks and rewards which are attached to that bond to this creditor? If the entity has transferred the right to receive cash flow to other entities but has not transferred substantially all risks and rewards to the other entity, identify whether the entity retains substantially all risks and rewards. This is the third scenario that we were talking about. So now tell me, in this case, what will happen? If the entity has retained all substantial risks and rewards, then the entity should continue to recognize. If the entity has not retained all substantial risks and rewards, then only there is a problem. So along with the bonds, if the risks and rewards are transferred, asset should be derecognized. Along with the bonds, if risks and rewards are not transferred, then this question arises that do I continue to have risks and rewards retained in my hand? If the answer is yes, continue to recognize. If answer to that question is no, I told you, then the problem may arise. In real life scenario, it could be a rare case, right? That if there is an asset whose risks and rewards, whether I have transferred to other party or I have retained, is not known. In such case, just look into the control aspect. If the control of that asset is in the hands of the entity, then entity should continue to recognize. If the control has been transferred, derecognize the financial asset. Let me now take you to the fourth scenario. Now please look into this fourth scenario and please try to understand what is happening. Mr. NJ has financial assets in the name of bonds which are providing cash flows to Mr. NJ. There is another party who is creditor of Mr. NJ, and this other party has to be paid off some amount. Now this time Mr. NJ does not transfer the right to receive cash flow to this other party, but Mr. NJ enters into a contractual arrangement with this other party that as and when Mr. NJ will recover the amount from this bond, Mr. NJ will provide the cash flow to the other party. In such case, we have the same question lined up. Should this bond be continued to be recognized in Mr. NJ's balance sheet or not? The answer to this question is straight. If the entity has assumed obligations to pay such cash flows in an arrangement, then the entity should continue to recognize the asset subject to 3 conditions. Now let us first understand this whole scenario in detail and also talk about those 3 conditions mentioned over here. Please understand this point very well. When we are talking about a situation where I have right to receive cash flows from a particular financial asset, so that financial asset is there in my balance sheet. You are another party, you are a creditor, and I have an obligation to pay to you. If I have an obligation to pay to you, it is obvious that I have to make some arrangement to pay to you. Suppose I was not paying you the amount because I was not having proper cash flows. Someday you will start fighting with me, right? That why are you not paying us our amounts which are due? I would say I don't have any funds myself. As and when the funds are obtained, I will give it to you. Now you start making rigorous inquiries, as in from where am I going to arrange the funds? How will I arrange the funds? I show you my financial records. I show you this particular bond that I have. I tell you that as and when the bonds are fetching me cash flows, I will give to you. I will give you the cash flows. This time I am not transferring the right to receive cash flows to you, but I am saying when I collect the money from bonds, I will utilize that money to pay to you. I will clear off my obligations, I will clear off my dues. Then it is simple thing that I would generally continue to recognize that bonds, that financial asset in my books. I will continue to recognize you as a liability, but subject to 3 conditions. Those 3 conditions are vital. If you understand those 3 conditions and impact of those 3 conditions, you will get to know where we are landing up. So please carefully understand what are those 3 conditions. Condition number 1. If I am not receiving any cash flow from that bond, I will not pay to you. That means my payment will arise to you only when I receive that cash flow. First condition. Second condition, I have no rights to sell that bond because you have restricted me, because you know that you are going to eventually get the cash flow out of that bond. You will be called as an eventual recipient. So eventual recipient has placed a restriction on the entity that the entity cannot sell off these bonds. Entity has no chance of selling off those bonds. Third condition, if I receive cash flow, then without making any material delay, I must pay you that cash flow without delaying. If all 3 conditions exist, then it is clear that I am just managing that asset. I don't have any benefit obtained out of that asset. In such case, if all the 3 conditions are fulfilled, then the asset should better be derecognized. And definitely looking into other factors like who has control. But here, if these 3 conditions are fulfilled, it is implied that I don't have any control. How will I have control? Just think over it. When cash flows are received, I should pay to you. I cannot have any material delay. I have no right to sell the asset. That means I don't have control of that asset. In that case, I would better derecognize that asset. Friends, when I make you write these notes, please write each of the points carefully, and at the end what I will do is a very systematic flow chart I will explain and make you write, so that your understanding with respect to this whole thing is absolutely clear. So let us begin writing notes now. So please write under the heading Derecognition of Financial Assets. Derecognition of financial assets should be considered only after consolidation of all subsidiaries. The primary question that arises is, has the right to receive cash flows expired? If yes, then derecognize the financial asset. If the right to receive cash flows has not expired, check whether the entity has transferred the right to receive the cash flows to another entity. If yes, then also observe whether the entity has transferred substantially all risks and rewards to the other entity. If yes, then they recognize such financial asset. Please write up this whole thing and then I take you ahead. Alright friends, you would have finished writing this much. Let us move ahead and continue writing further. If the right to receive cash flows has not expired and the entity has transferred the right to receive such cash flows to another entity, however, the risks and rewards relating to such financial asset has not been transferred, then identify whether the entity retains substantially all risks and rewards. If yes, then continue to recognize the financial asset. If the answer to this question is no, so you would write if not, then identify whether the entity has retained control over the asset. If yes, then continue to recognize the financial asset, and if the control also does not exist, then simply de-recognize the financial asset. So please write up this whole thing and then I take you ahead. Alright friends, you would have finished writing this much. Let us move ahead and continue writing further. So please write, if neither the right to receive cash flows has expired nor the entity has transferred such right to other entity, then check whether the entity has assumed obligations to pay such cash flows in an arrangement. If yes, then the entity should continue to recognize the asset subject to three conditions. Now let us look into what are those three conditions. First condition, the entity has no obligation to pay amounts to eventual recipient unless it collects equivalent amounts from the original assets. The entity is prohibited by the terms of the transfer contract from selling or pledging the original asset other than as a security to the eventual recipient. The entity has an obligation to remit cash flows that it collects on behalf of the eventual recipient without making material delay. So please write up this much and then we shall look into what has to be done with these three conditions. Alright friends, you would have finished writing this much. Let us move ahead and conclude the two paragraphs. In the event where all the above three conditions are fulfilled, the entity shall derecognize such financial assets unless it retains risks and rewards as well as control over such financial asset. In the event when any of the above three conditions is not fulfilled, the entity should continue to recognize such financial asset and simultaneously recognize a financial liability. So please write up these couple of paragraphs and then I take you ahead. Alright friends, you would have finished writing this whole thing. Let us move ahead and try to understand this in much clear manner. So the first point that you have to consider is the right to receive cash flows. There can be two possibilities that such right has expired or not expired. If the right to receive cash flows has expired, simply derecognize the financial asset. If it has not expired, then check whether the entity has transferred the right to receive cash flows to other entity. Answer to this question, when you are asking has the entity transferred the right to receive cash flows to other entity, answer to this question could be either yes or no. If the answer is yes, then ask whether has the entity transferred substantially all risks and rewards. If answer to this also is yes, you would simply derecognize the financial asset. So if the answer is yes, derecognize the financial asset. However, if the answer to this question is no, then what? If the answer to this question is no, then you further ask that if the entity has not transferred substantially all risks and rewards to another entity, then check whether the entity has retained all these risks and rewards. That means if you have not transferred the risk and reward to other entity, have you retained such risks and rewards? If the answer is yes, then look into one thing, that the risks and rewards of the asset are continued to be with the entity. In such case, the standard requires the entity to continue to recognize the financial asset. However, if the answer to this question, that is, have you retained the risk and reward, is no, then there is a confusion, because when it is asked has the entity transferred substantially all risks and rewards, we say no, the entity has not transferred. That means the entity should have retained all risks and rewards. Answer to that also is no. That means neither such risks and rewards have been transferred nor has been retained. Then the only factor that you have to look into is whether the entity has control over such financial asset. In other words, does it retain control over the financial asset? If the answer to this question is yes, continue to recognize the financial asset. If answer to this question is no, then simply derecognize the financial asset. However, one part of the flow is yet to be discussed. Look into this point. When we ask this question, has the entity transferred the right to receive cash flow to other entity? If the answer is yes, you continue with this flow. If the answer to this question is no, then you look into, has the entity assumed any obligations to pay cash flows out of such financial asset? If the answer for this also is no, then simply continue to recognize the asset. If the answer of this question is yes, then another question arises. All the three conditions, are they met? Those same three conditions that we have discussed some time back, are these conditions met? If the answer to this question is no, then you continue to recognize the asset. If the answer to this question is yes, then you further ask, has the entity transferred substantially all risk and rewards, and then automatically the flow goes this way. So if the answer to this question is yes, connect this to this tab and you will further ask the question, has the entity transferred substantially all risks and rewards? If not, has the entity retained the risk and reward, and so on. So friends, this chart is very, very important. This gives you complete understanding of derecognition of financial assets. I want you to take your time, systematically note it down, and then only we shall move ahead.